Hello and welcome. You are watching Business Plus here on News 9 Live. I'm Krishnakumar, and joining me in the studio is my colleague and friend Suyash Maheshwari. And as always, we begin the afternoon edition of Business Plus with a roundup of the day's trading session. India's stock markets is where all the focus. Bear in mind, lots of news for the stock markets to digest, including the latest escalation of the conflict in the west of Asia. It did take a beating yesterday. Let's understand what happened in the day's trading session. How did markets fare for the day? Suyash, talk to us. Yes, it's been more than 24 hours, but 48 hours since the escalation of the conflict. How did the markets digest that news today?
So Krishna, the markets have been buoyant since the last couple of days, and we have seen a rebound across the globe where we saw a 0.5% rally in US markets. In fact, the European markets also posted strong gains in yesterday's session, adding and building on to in today's session as well. And Nifty, as a matter of fact, has managed to erase all the losses that came after the war news broke out and the correction that we saw on Monday. So Nifty has not only regained all the losses, lost ground after the war news broke out, but it has also managed to add on to it. Now Nifty is currently on a 2-day winning run. The index managed to hold on to the morning gains, and we are seeing buying interest across all sectors except PSU Banks, which are seeing some sort of a profit booking, and IT space, which was a little bit jittery ahead of the earnings results. And we are also seeing participation from index heavyweights like HDFC Bank, like Reliance Industries, which were missing in the run up to that 20,200 sort of levels. Now Nifty today managed to scale the 19,800 levels once again. The index ended about 120 points higher, almost more than 0.5% higher at 19,811 levels, whereas sensex gained about 400 points and managed to close just shy of the 66,500 mark. Now the broader markets also moved in line with the headliners. The broader markets, I mean Nifty small cap index was up around 0.8%, whereas the mid cap index gained about 0.5%. We also saw a decline in volatility as India VIX dropped by about 2.5%. This all augurs well for the bulls.
Right. I started with the question, Suyash, about how is the market digesting all that volatility in the war. Two wars that are happening simultaneously, but looks like nothing is perturbing Indian markets. The buoyancy continues. It was a bit of a hit on Monday morning because it was a knee-jerk reaction, but come Tuesday evening, Wednesday, by Wednesday you're sorted. The markets continue to be on the same path that it was before. We have Mr. Aamar Deo, Head Advisory, Angel One Limited, now joining us live on the broadcast. Aamar, thank you so much for taking time out to be with us here on Business Plus, the afternoon edition. Talk to us, markets momentum continuing as Suyash is talking to us clearly. That escalation in the Israel-Palestine conflict not really affecting the Indian markets for too long, apart from the initial knee-jerk reaction.
Yeah, I would say that that definitely is a sign of confidence, and as we've been seeing is that across the globe, the markets did witness some negative reaction initially, but then that was overcome. And talking about our markets, we saw the Nifty bounce back significantly because earlier we were looking at the 19,200, 300 zone as a very strong support zone technically also. And from there only, those levels around 300, 350, 19,350 levels, we witnessed a pullback. And Nifty significantly up. And also, if you look at the broader other indicators in terms of advanced decline, that also remains favorable in for the bears, for the bulls. And also, if you look at the India VIX, because India VIX also at times under such circumstances where you rightly said that two wars are going on, one the recent one. So that also has not inched up significantly. It's below the 11 mark. So that also clearly tells us that investors at large are not as duly concerned. But yeah, one point I would like to add here is that crude oil prices have spiked because of this. So how long crude oil prices remain at elevated levels, that's something that we'll need to see. Yeah, crude oil prices from the recent highs have corrected, but what we see is that last couple of days from the lows, it has bounced back. So we'll have to see whether crude oil prices retain at the current levels, or we see some sort of, because that would have an impact on energy prices, ultimately leading to the inflationary trends. So in a nutshell, I would say that overall this bounce back was, I would say, definitely, I would not say exactly on expected lines, but some of the technical indicators were clearly pointing that there is a strong support at lower levels. And also, if you look at the derivatives data, so there also we've seen some long build-up happening and short covering. So there is not much short build-up happening. So that also is a positive sign to say.
All right, so positive signs, and Suyash, what a time to have positive signs, isn't it? The world is dealing with so many negative signs, but something about the Indian markets that is, keeping it strong. Also, we were talking about consolidation in the Indian market before the Israel-Palestine escalation broke out. So, in that sense, is it markets finding its lower levels and consolidating better with all the volatility around?
I mean, that seems to be the case, Krishna, because if you look back, the market action in the last 1 month or so, primary action was driven by the global cues that we were getting. The bond yields were around the 4.7, 4.8% mark at a 16-year high. The crude prices had surged to about, $97 a barrel mark. Now, crude, talking about crude, Aamar said that it remains a pain point for the market, but crude prices are still $9 below the kind of levels we were seeing. Yes, they have bounced back from the $84 low that we saw last week, but they are still considerably below that $97 peak that we had witnessed recently. Also, the dollar index was a pain point. Now it seems that the focus is once again shifting to domestic cues as we have earnings trickling in. The Q2 earnings trickling in starting from this week itself, with IT Pack reporting the earnings. So overall the momentum will be dictated by how the global cues and the earnings season evolves over the next couple of months.
Earnings season, definitely very important cue to watch out for the markets. But the way the markets are right now, again, it's going to be all about individual stocks and stocks that are moving on the basis of news, isn't it?
Yes, Krishna, exactly. It will be about individual stocks and sectors specifically that we are because we are heading into the earnings season. And that's what will drive the market momentum. In fact, I want to come back to you, Aamar. Last time in the Q1 results, the Indian markets were able to scale the July highs, which were the record highs of about 19,990 levels. Do you expect Nifty to make a dash at 20K in this earnings season as well?
Yeah, I would say that overall earnings season is expected to remain strong given the past trend. So, and Nifty is currently around 19,800. So, what we've seen is that despite the negative news flows, the market is holding up, and that also we are seeing a broad base. So, in terms of sectors, in terms of the advanced decline ratio, in terms of India VIX, so that really tells me that the trend remains positive. However, on the upside, I would say technically, if you ask me, somewhere around the previous, if you recall, the previous all-time high was just tad below the 20,000 mark. So that's a level, and that's also a psychological level. So yeah, that levels Nifty could definitely look at breaching or touching in the recent times to come.
All right. Stay with us, Aamar. Let's then quickly look at those sectors that were just flashing as we were speaking. All sectors in the green, barring a couple of them, Suyash. One is the Nifty PSU Bank pack, which is down nearly 1% for the day. And then you have the Nifty IT pack in the red, but like flattish close for the Nifty IT pack. But every other pack, FMCG, they were doing so well in the recent past, continue to do well today. Auto doing well. Private banks doing well, but not exactly PSU banks, Suyash.
Yes, I think as far as banks are concerned, we are seeing some sort of convergence in the performance of private banks and PSU banks. And in fact, if you look at the past couple of weeks, Krishna, the rally in the PSU banking index had seemingly fizzled out. We were seeing corrections of about 3% and 4%, in the last 5-6 sessions or so. So it seems that, there is some sort of a convergence taking place where, Nifty bank, the private banks are now, coming into the limelight. We saw a good movement in HDFC Bank also today. You know, HDFC Bank was up almost 1% in today's trading session. In fact, if you look at Nifty Bank, you know, on Monday fell below that 44,000 levels, which was its lowest levels in over a month. But today we have seen a good, not only a good recovery, but the index has you know, managed to scale past that 44,500 mark, which was seen as a crucial long-term support for the index. So all in all, the banking, as far as the banking space goes, it seems that the focus is shifting towards the private banks from the PSU banks.
Is it also because, you know, PSU bank stocks have run up quite a bit in the recent past, and there is consolidation mode happening over there?
I mean, definitely, like we see returns across the, you know, the smaller banks, especially in the mid-cap PSU banks. We have seen a good bit of run-up. Some of the stocks have turned multi-bagger in a span of few years, Krishna. Whereas, you know, some larger banks like SBI have not really participated in the rally, and private banks have been under pressure. And you know, talking to experts like Aamar, it seems that valuations are looking cheap. Amar, so like overall...
Good point, Aamar. I want to carry off on that what Suyash is talking about. Something about PSU banks, PSU mid-cap banks doing well. Large banks, especially in the private sector, we all know what happened with the HDFC stock post the merger. So large private bank stocks not doing well, but still enough value in public sector banks, specifically speaking mid and small banks?
If you look at the public sector banks, you rightly said that we witnessed some multi-baggers taking place. And also we need to remember that if we go back in time and see some of these banks, like for example, if I'm talking about Central Bank of India, so we see that it has rallied significantly, it means more than doubled since June this year. But if we go back and see, the stock was at a point of time trading as high as 200, currently it's around 48.50. So we need to look at it from that perspective as well. So that will give you that will give us a better idea. Be it Indian Bank, if I look at Indian Bank, so Indian Bank is one bank which is trading at record highs. So it corrected significantly, and then from almost 40 odd levels, it's around 40-45 levels. It's currently around 400 odd levels. So there it seems that the trend is different. So it's not only that the small PSU banks are behaving the same. Some of the banks have really performed exceedingly well. Like Indian Bank is definitely one of them in terms of performance. If I look at the other bank, like for example, Indian Overseas Bank. If you look at this bank has also done quite well over the last 6 months. I would say roughly around 4 months, it has more than doubled. But if I go back in time, so the stock was, this bank was trading at around 200 plus levels. Currently it's around 44. So some of the banks, PSU banks, are trading at record highs, but many of them, in spite of the significant rallies, they are still trading at 1/4, 1/5 of their all-time highs. So that speaks about the specific banks as well, as to what's going right for them, what's not going right for some of the others.
Now, Aamar, what's going on with the realty space? We have seen a very good run-up in realty stocks. In fact, you know, in 2023 alone, realty stocks have run up about 45% or so. Nifty Realty recently, yesterday, in fact, scaled a 15-year high, and a lot of stocks have also participated in that rally, such as Prestige, Sobha, DLF, Godrej Properties. What's your overall outlook on the Nifty Realty pack, and is there more upside, or all the positives have already been priced in?
Talking about the Nifty reality stocks, if I look at them, for example, to start with Brigade Enterprises, this is one which has really performed exceedingly well. Last few weeks, we've seen some sort of consolidation, but the long-term trend remains very strong. If I talk about DLF, DLF again is trading significantly higher. It has gained significantly, but if you go back in time, the stock used to trade around somewhere around 1200 levels or so. So it's trading less than 50% of where it used to trade. The technical indicators and some of the factors also are in favor of this company. If I look at Godrej Properties, again, this is one which is still trading at a significant discount to its all-time high. Overall, the trend remains strong and positive. Lodha is one which is trading close to its record highs. So what it tells me that some of the big names, they are clearly in a very strong uptrend. So that tells me that any correction would be a buying opportunity. If I look at Mahindra Lifespace, again, this is one which has been correcting. We witnessed some sort of profit booking here, but more or less Again, the levels to watch out for would be somewhere around 480 would be a level, 480, 500, where the Mahindra Life space would find support. So most of the IT stocks, and the one I would like to talk about is Prestige. This is one stock which we've seen significant rally. The stock is trading at its record highs. So some of the IT means realty stocks are trading at record highs, and the structure on the charts also, and also the fundamentals are clearly saying that yeah, the going forward, the times are going to be easy for them. Means the business should be good for them, not easy. The business should be good for them. So we'll have to watch out for that, because now what's happened is that earlier most of these many of these real estate companies were focusing only on one segment. Now they've gone into affordable housing, they've gone into all different segments. So that gives them a larger universe to serve. So that also is definitely helping them.
All right, talking about IT and IT parks, Suyash, the IT pack is something that the focus of the Indian investor is invariably one way or the other. Whether you're investing in stocks or in mutual funds, how many IT stocks do you have in your portfolio? IT pack today closing flat, lots of pressure on the IT pack, and yet lots of hope on the IT pack as well, isn't it, Suyash?
Yes, we had seen a good bit of run up in the last 1 month or so, but as we are closing in towards that, the result season, of course, we are seeing a bit of jitteriness playing out. Now, the expectation broadly is that, like Q1, Q2 will also be a muted quarter, but the focus, I think, this time around, more than the numbers, will be on the commentary coming out from the management and the guidance coming out. As far as what the demand outlook is looking like from Europe and the BFSI sector in the North America. Another factor to track will be, what kind of recoveries are they expecting in the lead up in the second half of the financial year. Another the deal wins. One of the things that in Q1 we saw that a lot of companies were had said that they had cut down the guidance. We saw Infosys significantly reduce their guidance, and in fact in the last 3 months in the previous quarter we have seen some good deal wins by these IT companies, some mega deal wins which are above 500
billions of dollars
worth of deals.
Aamar, IT pack is under pressure, quote unquote washout year is what some analysts at JP Morgan have said. Lots of doubts and fears about the current financial year, with hopes of a proper rebound in the next financial year. How does one approach the IT pack as an investor in the time being because of the news flow? Look at the kind of deals that they've struck in a so-called muted quarter. They're striking multi-billion-dollar deals. How as an investor are you supposed to approach the IT pack?
I would say that looking at the IT pack, if you see there are some sectors which will give decent returns. IT is definitely one of those sectors. Now, again, what happens here is that in the sectors, because IT is so much of an evolving area and so much of technology advancement taking place, so the companies which would be able to capitalize more on the AI, on the machine learning, on the advanced technologies which are being there, and they are able to serve their clients, they would stand in a better state. But overall, I would say IT is a sector definitely one can look at. You look at L&T Technology Services. That's one. The stock is, in spite of a significant correction earlier, the stock is trading close to, it's not exactly record highs, but significantly higher. If you look at Wipro on the other side, it's significantly at a discount to its all-time high of 700, it's around 420 or so right now. If I look at Infosys again is trading at some discount to its all-time highs. So what it tells me is that these are sectors, and among the sectors you have to look at least some companies which are there, and in terms of size, which will give you decent returns. So you should definitely have a couple of IT stocks in your portfolio, no doubt.
Now, in the top 3 companies, TCS, Infosys, and HCL Tech, which company do you expect to outperform in this particular sector?
Yeah, if you ask me, so TCS looks promising. Amongst the 3, TCS is one stock one can definitely look at. It has rallied, and if you look at the stock also, the stock is not very far from its all-time highs. So, but on any significant correction, this is one stock one can definitely look at having.
All right, so clear winner he's picked out, Aamar. Aamar is talking about TCS being the winner, the one to have a good time amidst so-called bad times for the IT pack per se. But Suyash, one is are the sectors that we're talking about. I think we've fairly covered all the sectors that we were discussing. It's time now to get into the stocks, that moved markets today and the news that moved these stocks as well. Suyash, if you can tell us.
Yes, so among the top gainers in the Nifty pack, Krishna, today was, Hero MotoCorp. Now, there was no specific news trigger, but we have seen that the stock has faced a fair bit of pressure lately because there was a FIR filed by the Delhi police against the chairman Pawan Munjal. Also there was a ED raid that happened in August, so the stock has seen some sort of a pressure, but in the last couple of days we have seen a decent bit of a a pullback rally of sorts playing out in the stock, where it has actually gained back about 4 to 5% in a matter of 2 sessions. In fact, today also the stock gained about 4%. Another stock was Grasim. Now the stock has been in the news lately. One of the reasons why we have seen a good run up in Grasim is that the company is looking to foray into the paints business, by the end of fourth quarter. But again, the stock has been on a 2-day winning run. It has also gained about 5 to 6% in the last 2 days. Wipro also was in the news today. Now Wipro has picked up a 9.5% stake in renewable energy company FPEL Ujjwal for a consideration of about 6 crore rupees. Now the idea is, Wipro is saying that the reason that it bought the stake was that it wants to enhance the use of renewable energy in its operations, and this acquisition will help it achieve that goal of becoming net zero by 2040. Ultratech Cement also saw a fair bit of run up. It was up about 2% today. Now there are reports that Aditya Birla Group maybe competing with JSW Group for acquisition of Heidelberg Cement. So I think that's why we are seeing a fair bit of run up. Reliance also amid a rally in a lot of heavyweights, we have seen a good pullback in Reliance Industries stock. Now among the losers, Krishna, if you see the losers, 3 of the 5 stocks come from the IT space, and that gives us cues that investors are waiting and booking profits ahead of the earnings because they expect some sort of a negative news as far as commentary is expected because of this higher rate for longer narrative that is playing out in the US. TCS, which on Monday had hit a 52-week high, saw some bit of a correction ahead of its results. HCL Tech was the top loser. It fell about 1.5% or so. It comes out with its results tomorrow. LTI Mindtree was another one which fell over 0.5%. Apart from the tech stocks, Coal India also saw a fair bit of profit booking. The stock corrected by about 0.6%. Now yesterday the stock had broken past the 300 levels for the first time in probably around 4 years or so. So a good bit of run up Coal India has seen. So perhaps we are seeing some bit of profit booking taking place. And SBI was one of the stocks that saw muted action today amid a muted day for the PSU Bank.
I was just about to say SBI following line with the PSU Bank stock pack for the day. IT, incidentally, Suyash, one of the top gainers, which is Wipro, and 2 of the top losers for the day. So talk about a mixed bag as far as the IT pack is concerned. I'm still surprised that the buying of a renewable energy company is what pushed the Wipro stock up, and Wipro's ambitions to be a net zero carbon emission company is being given the thumbs up by investors on the street. Fascinating, absolutely. So top losers over there. Aamar, before we let go of you, I want to understand, tell us, any stocks that stand out for you, any stocks from these top losers that you think people should stay away from or be cautious about if, they are looking to buy?
So I would say that amongst the IT pack, if I look at TCS, as I earlier talked about, that's one stock one can look at. And also on any correction, if you look at one stock I'd like to talk about is Sun Pharma. This is one stock from the pharma space, which looks, I would say, promising from a long-term perspective. So on any significant correction, this is one stock one can definitely look at adding.
Now, Amar, I just want to squeeze in one final question. We had some news coming in about Vedanta. Now, Vedanta has taken its first steps towards demerging its business into several listed entities. Now, the company has decided to incorporate base metals unit, which will be called Vedanta Base Metals, for a authorized share capital of about 1 lakh crore rupees. Now, base metals as a whole contributed to around 5% or so, in the FY23 revenue, and the stock has seen a good run up in the last 10 days or so. In fact, since September 29, the stock is up about 10%. So, Amar, my question is simple. Do you think that the value unlocking exercise that the Vedanta group was banking on, has it already been priced in, or can we expect some more upside from Vedanta?
And if I can add to that, that entire process of demerging into other listed entities, so many questions over it because the kind of debt burden that Vedanta has on its books. So, if you can tell us, put together, how do you see the Vedanta stock's performance so far and the way forward as well?
Yeah, looking at Vedanta, what we see is that the company is definitely trying to diversify because it's into different sectors, into mining, into infra, into metals. So it's demerging all these different businesses. That's one major agenda, and also what the company is of the view that demerging would give them more leverage in the sense that they'd be able to manage the companies better, and also that would give investors a better opportunity or a choice as to which sector or which segment they want to invest in. Apart from that, that would also what the Vedanta management is of the view that that would also help them manage their debt burden differently because that would be then across the different companies. Looking at the value which would emanate, which would come forward, that's definitely a big question as to how that will play out because that would again depend upon the management as to how they steer the organizations because and we have to remember that these companies are primarily all cyclical in nature. So you'll see that there'll be major ups, there'll be downs, and also these are highly capital intensive sectors. So how these companies are able to manage their debt, that's definitely going to be an important issue, interesting thing. But at the same time, Vedanta has corrected significantly post this announcement. Currently, it's around 227, has bounced back recently. So I would say that we'll have to give it time before it really comes out as to how these companies are well managed, because then only the value would be created.
All right, fair enough. Aamar Deo Singh over there putting into perspective as to what's going on with Vedanta.